Hello, guys. My name is Isaac Jonas. As most of you probably know, I'm going to be sharing with you my weekly stock market briefing. In this briefing, I'm going to give you an update on three things. Number one, a complete earnings recap on Amazon, which really blew out on the earnings expectation. Number two, I'm going to give you guys a macro outlook for next week with a focus on the economic data that I will be keeping an eye on as I open the week next week. Three, I'm going to share with you three actionable trades or stocks that I'm particularly interested in for next week. Again, that doesn't mean that I'm not going to look at other stocks. Anything can happen in the market, but those particular stocks, they are at a level that I'm very interested in taking some trades. This week was a very interesting and profitable week because just today I made $106 on Archer trades. And I did these trades as I was researching for this, and it was very interesting to just make some quick money. Meta reported earnings yesterday. That was on this week, and it dropped very dramatically. I think it dropped by 11% after earnings, and also today it was down 2.72% on Friday. So that was an opportunity for me to trade in and trade out because I like to trade stocks when they pull back. Again, this is not investment advice, but I'm just sharing with you guys what I'm doing. Always make sure you do your own due diligence before you trade or invest your money. Those who have been following me on this journey, they will recall that I started this trading journey in this account that I'm sharing publicly with you guys. I started with 21,400 Canadian dollars, and now this account is up 84%. The money that when I checked just before market close, it was at above $39,600. So for me, that's something that is interesting because that means I am beating the S&P 500. So let's dive into the earnings for Amazon, which was very interesting because the stock went up by 13% at pre-market and closed the day 9.58% on Friday. The net sales increased by 13% to 102 billion. And also the North American segment of sales increased by 11% if you compare it with year over year to 106.3 billion. International segment sales increased by 14% year over year to 40.9 billion. That is a 10% increase excluding changes in foreign currency exchange rates because these companies, they load billions of money on their balance sheet. So sometimes when the US dollar goes up and down, like in this case, they actually made 1.5 billion in just having the money probably in the currency that really appreciated. Now, they did set aside 125 billion in 2025 as an increase to be spent through into 2026. This is very interesting because when you want to grow a business, sometimes you have to spend money to recoup the benefits in the future. So Amazon, they're doing a fantastic job there. I like to look at the free cash flows. The free cash flows, if you look at the latest report, 14.8 billion from the trailing 12 months, driven primarily by an increase of 50.9 billion in purchase of property and equipment, net of proceeds from sales and incentives. In other words, they are spending money on something, so that's why the free cash flows dropped a little bit. But still, 14.8 billion is still a lot of money, right? To have on your balance sheet as free cash flows. I also like to look at the long term debt, and I want preferably to have a business that can easily pay off their money in 3 years, assuming that their free cash flows continue to grow and their long-term debt is fixed. Because what usually causes companies to go bankrupt is that if the economy drops or something fundamentally happens in the business, if they don't have cash, the long-term obligations are the ones that usually force them to go under. Because legally you're supposed to pay your suppliers or whatever money that you owe other people. So once I see that there is a lot of cash and cash equivalents, there is growing free cash flows, but also declining or a long-term debt that is manageable. I think for me, that's the first thing that I look at before I consider even looking at the valuation of the business. Then I will look at the management and other things. So the key takeaway from Amazon's recent report is that AWS is Amazon's cloud business that is driving the business growth based on the high demand of AI infrastructure, which has supported also other stocks in the AI sector. So let's quickly look into the macro update and the next week's calendar. 10-year treasury yield were 4.1% per CNBC chart, which is modestly higher yields pressure growth stock. US dollar index DXY is firm and cautious risk tone. The West Texas Intermediate crude is a benchmark that is very important. It has been drifting a little bit lower, but I think it's probably because the OPEC Plus, Organization of Petroleum Exporting Countries, has been increasing output. Now, let me jump into the three top stories that I think were very important this week. The Fed, they made the right decision. They reduced the interest rates by 25 basis points. That means money is getting cheaper for businesses. So this is good for growth stocks. But at the same time, the Fed signal was that in December, it's not guaranteed that they are going to do the rate cuts. So it's a risk factor in that if they don't cut interest rates or they start increasing, I don't know what's going to happen. So the market has to readjust and keep that in mind because people are betting for the future. If you are right in your bets, you make money. If you are wrong, then you lose money. So that's why it's very important to understand this perspective. The consumer confidence dropped 94.6, 6 months low. It signals softening growth, and the government shutdown risk in the US may delay the November CPI data. Now, the sector breadth, I like to look at the technology sector. You have leading companies that are beating earnings like Meta, Amazon, Apple, Microsoft. These have been driving the S&P 500. I think they account for over 30% of the S&P 500, which is a broad basket of the publicly listed companies across the US. At the end of the day, I think the most important thing is also looking at cyclicals, defensive stocks, and looking at these things in a holistic framework because there might be sector rotations. Now, I think because the tech sector is some stocks are overvalued. Some people might be thinking like probably it's time to position yourself and have a balance in the portfolio. But again, this is not investment advice. It's me just observing that one other sure way of losing money is jumping and investing in stocks when they are at the top. So understand valuation. If you don't know how to value companies or you want to learn more about investing and trading, make sure you book a one-on-one coaching on www.streetwiseeconomics.com. You can also subscribe to get notification when I publish regular videos like today. Now, next week, high impact economic events in my view. There's going to be ISM manufacturing PMI data at 11 a.m. Eastern Standard Time. The focus is that there's going to be a contraction to 49.1. Anything above 50.0, that sector is considered to be expanding. Now, there's also going to be the JOLT, that is a survey done by the US Bureau of Labor Statistics to help measure job vacancies. It collects the data from employers about businesses, employment, job openings, recruitment, hires, and separations. It is very important because it tells you the number of jobs that are open and that is not. Why is it important? The Fed will be looking at things like this because their mandate is to make sure that employment is at an acceptable level and inflation is at an acceptable level, about 2%. Unemployment should be 4%. So that is very important to have that balance. Now, I like to conclude by sharing the watch list. On my watch list, I'm looking at, most of the tech stocks, if you're looking at Amazon, Apple, Nvidia, but they've really rallied. So I am specifically looking at stocks such as Archer, Meta, and Galaxy. But these stocks, I like to trade them because I've been following them. And this is not investment advice. What I've seen is that for Meta, the options are very expensive. So I tend to like to just buy a few shares, buy and sell when I'm trading. Even 5 shares, the 5 shares gave me yesterday and today, it gave me like almost $200. I just buy and sell when it comes to a technically interesting level. What is also interesting is that I've been using options and I've been talking about this. Options are very risky, especially if you don't understand what you're doing. I choose high delta leaps, but I usually like to trade stocks when they come down to levels that I consider to be interesting, and I do a lot of work behind the scenes before I even consider trading to understand valuation. So I'm keeping an eye on Meta to possibly trade SoFi, Archer, and Galaxy, but also there might be other potential stocks that usually drop. I will tell you that even this week, sometimes I usually wake up at 5 Pacific Standard Time and I do an outlook of what's really going on in the market. And I use AI to generate the most important things that I consider the risk factors, stocks that have gapped up, and I like to just have a scan of what is really happening before I jump in. So if you want to learn more about that, make sure you subscribe on www.streetwiseeconomics.com. And also you can follow me on social media so that you don't miss any insights. This is it for now. I hope this briefing you found it helpful. I will see you on the next one. Make sure you trade and invest wisely and tell me what you are looking at in terms of your watch list. What stocks do you want me to do an analysis on in the US? Let me know and I will see you on the next one. Have a lovely weekend. Bye bye for now.